Seventh floor.
We'll see you around the timeline. Feels good to be back.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
I think that Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Base. JP Morgan, BlackRock, DTCC, Fidelity. The entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it. He finally said it.
I'm so bullish.
Andy's bullish. I'm bullish. We're bullish. Is headed to the top. If we're not already at the top, we're going to the top.
We're going.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the roll-up.
Zoom out. The institutions aren't coming. They're simply here. It's the golden age of crypto, guys. Get right. Let's go.
Hit that air horn, Rob. Hey, happy Thursday, Tokenization Tower. Today's July 23rd. You're watching the Rollup live from the financial capital of the world, the Nest.
Everyone say good morning, Mr. Duker.
That is those are my landlord's glasses.
Mr.
Don't tell her.
Duker in the building.
How we doing, Rob?
Tinka,
How we
Duka,
doing?
Duka, welcome to the roll-up.
How you doing, man? Happy Thursday. Shout out to Plume, the Nest, on-chain infrastructure, powering the future of asset management. Rob, what's going on out there, man? I thought we were going up. We're going down.
This is
Oil.
what apathy feels like. Mr. Duker, welcome to
Oil.
apathy. This is what it feels like. This is where we are. We find ourselves in the tail end of the bear market. We found ourselves moving through, surviving through capitulation.
Yes.
And now we find ourselves in apathy. So now the question becomes, how long does this last? Does this last the summer? Summer and apathy feel very similar. Like people go on vacation, they leave.
Yep.
You're going to Argentina. There's plenty of things to do in the real world.
Oh my gosh. Dude, there is the biggest snowstorm in years hitting Chile and Argentina right now. Like, I'm talking, Chile got 10 feet of snow in 5 days, and there's hotels in the middle of nowhere that are just absolutely snowed in. Like, people, like, the infrastructure is so small, and, you know, it's very small, like hotels.
Yeah.
There's one at the base of this mountain. The snow has covered the full door. They literally have been snowed in for 3 days. I'm talking like
Is that the hotel you're staying in?
no, 72 hours, no way to leave. But as soon as they get back on that mountain, oh my gosh, it's gonna be the most insane snow they've ever skied in their lives.
Sounds like good timing.
we got projected 80 inches for the 12 days that I'm there. That's like unheard of. Like, that's like, get your snow tires ready, boys. Alrighty. One-arm bandit. Got to get the liquidity around 64.5. Let's go. Clarity coming. We're about to moon. X account is funny. Good morning, new type. Good morning, team. How we doing, guys?
It's funny. All you guys in the chat sound pretty bullish. You guys are like clarity act, liquidity, then bounce.
Yeah. Good. Honestly, we need that. I mean, it's just like structurally, we're just in a weird spot with gold. Or not with gold, with oil. So... All right, guys, let's keep it rolling. We have a good show today. We've got Gian, the COO of VALR. VALR is an African exchange that just integrated Hyperliquid effectively as its underpinning. And then we've got the founder of Cysic talking about the AI stack today. So it should be a good show. And yeah, markets, weather, all of that. We've got our guests at 1 and 1:30. So we get through that, and then we'll do a lot of markets, charts, and more after. As always, our topics are powered by our friends at Trezor. Visit Trezor.io. Use code ROLLUP10 to get access to a Trezor for 10% off. Let's get into the markets, into the weather. Let me tell you about Frax first, our stablecoin partner, open, stable, and borderless digital money, powering the future of the economy. Visit frax.com to learn more. It is 75 degrees. It is sunny. It is t-shirt and shorts weather here in New York, Rob.
Fantastic. Yeah, it's good weather down here too. Beautiful day. I hit the beach this weekend.
There you go. As always, our weather is powered by our friends at Relay. Visit relay.link to start swapping seamlessly across many chains. One of the leading payments companies by volume transactions in the space, kind of dominating out of nowhere. All right, let's get into the markets. Before we do, let me tell you about Denari. Tokenize U.S. equities and bringing real-world stocks on-chain. To explore on-chain access to tokenized U.S. equities, public markets, visit denari.com. I see a lot of red out there today. I see a lot of red. Beep. Yeah. I mean, oil is at $100. I mean, oil is trading over 100. QQQ, the Nasdaq's down 1.5%. There's going to be a renewed fear of inflation if this oil price doesn't dump 15% next week. FOMC, I believe, is next week. If oil is ripping through that, there's going to be a higher chance of inflationary concerns. They're still probably not going to raise rates, but people are worried. There's always a summer lull in the markets. You know, you get these summer lulls, right, for the stock market, usually like the September lull in the midterm year. That usually marks the bottom for Bitcoin in the midterm year as well. So there's a bright side to look at this. If we do get a little bit of a one last apathetic FU to the face, that should be the bottom and should coincide with stocks going down. But look, I mean, we're just going to keep trying to accumulate coins, stay strong. ETH down a little bit, Solana, Chainlink, Near down a bit. Bitcoin hanging around the 65s. It's pretty reasonable. It's pretty par for the course.
Trump says there will be another massive attack on Iran.
Yeah, I mean, oil is ripping. I mean, oil is trading, last I saw it was over 100. Yeah, crude is at 92, and oil itself oil is over 100. So...
apparently there's a meeting with Trump and Xi. China and U.S. still in contact on Xi's summit trip despite Trump's election claims. There's a lot of macro posturing happening. Oil up on the report that Trump says a massive attack is being planned on Iran.
Oh yeah,
they're
flying
going to
today.
hit infrastructure. Brent crude surges 5% to $100 after President Trump threatens massive attack on Iran.
Yep.
This feels like, and also he says there's not a deal. They're willing to discuss terms. Maybe there will be a deal.
That's what I'm saying.
I mean, the playbook thus far has been oil up. Well, we got to bring oil down. Let's talk about doing a deal. Oil down. Well, we don't need a deal. So let's
bomb them.
That the deal is off the table. Let's blow them up.
So I saw this chart of Trump, and it's Trump's announcements correlated to the stock market, and like when there's a big high, he starts bombing Iran over the last 6 months, and when there's lows, there's deals announced, there's like lower inflation announced, there's like all this there's like new Fed, there's all this stuff that's announced, and it's like he's like selling his bags, filling his bags, selling his bags, filling his bags. It's pretty outrageous if that's what's happening behind the scenes. I don't know if officials can actually do that kind of stuff, but. So that's kind of the macro view, Rob. We don't need to get too deep into the macro side of things. It's a bit annoying when you have to pay attention to that stuff. But I do think it affects what's happening out there.
It does, and there's two more things that I think are just relevant to just keep an eye on.
Yeah.
One is this, Trump Xi meeting, China and the U.S. A lot of people think that, the U.S. went after Venezuela and then now after Iran, just as you work towards like what a deal could look like with China. This is kind of like the leader of that world. It's all posturing. Apparently, things are starting to ease, but the president, the Beijing, China, and U.S. summit is expected in September. I could see that potentially, causing a stir, maybe some volatility around that. And then the other thing to watch is the 10-year treasury, like the bond market is doing some very wonky things. Yields are going way up.
Really?
And that obviously
like on
makes
the 2-year and the 10-year and stuff?
the 2-year and the 10-year are way up.
Whoa.
And that causes issues because that means that the government has to print a lot in order to finance its debt, because that is the rate that the government has to pay on the debt that it is loaned.
Yeah, the 10-year is ripping.
I, again, think this is short-term bearish, and I expressed a little bit of this yesterday, but I think this is short-term bearish, long-term bullish. We're going to hear a lot more rhetoric around the national debt, paying interest on our debt,
Yep.
how this is requiring us to print a ton of money and inflate our currency away. All of this is like tremendously bullish Bitcoin. So again, things breaking, if you look at these things as a risk asset, they're going to, and I think that is partly why we're seeing Bitcoin separate from the rest of the altcoin complex.
Just get
because
yourself some Zec.
the altcoin complex is very much like a technology index, and
Yes.
Bitcoin is a fundamentally different thing. And so I think right now, all of these high rate environment things are leading to a drag on the altcoin complex and the technology companies at large. Whereas Bitcoin is a fundamentally different thing. It benefits from hyperinflation and these fears of national debt. And so I think that's why we're seeing Bitcoin pull away a little bit from the rest of the altcoins.
And it is funny that every midterm year we get the 4-year cycle bottom, at least that's how it's been. And that is when the heightened pressure, politically speaking, hits the economic tape. Like, here's what happened in the first 2 years of Trump's campaign. He added $3 trillion to the national debt. Americans, is this who you want? And like, just those stats going out there is like, oh, there's got to be something that I can preserve my currency in. You know what I mean?
And Andy, it's always about money. The Democrats, they spend too much on entitlement programs, too much on, sponsoring immigrants, too much on healthcare, right? So they spend too much money. That's why our national debt is so high. Oh, Democrats are, the Republicans spend too much money on the military. We're funding all these wars. Yeah. They're the reason our national debt is so high. Yeah. And so they're screaming the same thing, blaming each other. The result
is Bitcoin and the moon.
The resulting thing is all the same. It's the national debt is too high. We're spending too much money. The government can't bail itself out like this. Yeah. The only way is to print ourselves free. And obviously we know what happens.
Sounds like gold's going to fly again soon. Yeah, maybe needs 10 years traded at these levels longer than it did back in 2007. History repeated itself. I highly doubt it. I think the entire world is incentivized against any sort of GFC-like event, obviously. So we're not going to be doomers here in the show. All right, Rob, we've got the VALR CEO in the house. We got a bunch of news and tweets and markets to cover with you guys, but let's get them up. Let's get that part of the show started. Before we do, let me tell you about Near, your home for discovering and using apps on chain. Near is one of the best on-chain applications we've ever seen for using your apps, your funds, swapping, sending, transferring on-chain. There's confidentiality baked in. You can be private on-chain, just like Zama as well. One of our partners of the show. Zama is also ripping, which is great to see. They're absolutely flying today, Rob. So gotta love to see that.
Got the shout out from the multi-coin gentleman over there.
They did.
Part of the privacy complex. So yeah, great to see them doing great. We have a quarterly update from their team. And some
coming
of the
on
other
the show
privacy cabal members. So pretty stoked around that.
Yeah, same here. I mean, they'll be on the show next week, next Monday, talking about their private technology that they've built, what that looks like in practice, their quarterly report, their financials, all of that stuff. I mean, Rugrat in the chat has been screaming at you guys to buy Zama. Like, he's been yelling at us that Zama's undervalued and that we need to get exposure. And if you guys been watching, we've been covering it. And yeah, the thing's at 5.5 cents. It's up. I mean, it's up a gigantic amount this week. I mean, that daily candle today is nuts. I should have bought more as soon as I saw it yesterday after that multi-coin tweet. I mean, that thing is just, I mean, we're talking, we're up 57% in 4 days.
You got that right.
Wow.
Well, we got our first guest ready in the back. We're going to bring him up, COO at VALR. And I'm excited. I mean, Hyperliquid, VALR, and more. Let's go ahead and bring him up on the show.
Hey, Gian, how are you, man? Good to see you. Welcome to the show.
Good to be with you both.
Welcome.
Yes, sir. I love your South African accent, man. It's one of my favorites in the world. It's beautiful.
Great. Yeah,
spent a good bit of time down there.
I'm calling in from South Africa, so that was
beautiful.
spot on.
Beautiful. Yeah. No, we do our homework around here. So great to have you on the show. And yeah, I mean, there's a lot talking about trading, about derivatives, about perps, about Hyperliquid, about VALR, liquidity, all these things. But man, maybe just give us a bit of a lay of the land of what you're really building at VALR to start with. I mean, you guys have a bit of a history of kind of being a prominent platform for the African region, obviously based there in South Africa. What are you guys building? How did it kind of start? What was your involvement? Give us a bit of a quick speed run through the history here.
Yeah, absolutely. So VALR is about 8 years old. So actually a pretty old exchange. We were founded, as you mentioned, in South Africa. We started off really as just a full service crypto exchange. We built all of our infrastructure ourselves initially. So we launched VALR when there was really just one main exchange in South Africa that was dominant in this part of the world. And since then, we've actually taken a market-leading position where we account for about 70% of volumes in South Africa specifically, and we're the largest African exchange, serving African customers predominantly. We offer everything from spot trading across 100 plus assets to spot margin trade. We can talk a little bit about derivatives shortly. We've just obviously integrated with Hyperliquid, and I believe that this is the first time a regulated exchange has integrated a layer one to offer perpetuals across a wide range of markets. And I've been at VALR pretty much from the beginning, actually. Started off literally as we launched trading and fiat on and off ramps, and began my journey literally looking after all our customers. I was the guy doing support tickets at the very beginning. And since then, one thing's led to another, and we're about 150 people strong now, and I serve as COO at VALR, and very thankful to be here.
Yeah.
Very cool. Well, it's a pleasure to have you on the show. Like you said, you were there from the beginning, so you helped start the culture, and now it's grown significantly. Before we get into the integration with Hyperliquid and what you guys are doing with the perps markets, I'm just curious why. And I haven't really thought about it, but having you on the show, I sort of realized this is the case. Why do you think there's so much of a regional approach to exchanges, right? And, we're here in the US, we've got Coinbase, that's sort of the go-to. We got Kraken and some others as well. Abroad, Binance is, really, really well known, very popular. BitGet growing in popularity as well. These are all sort of gotten their pockets geographically, but at the root, at the core, the technology is very similar. The functionality is very similar across these different exchanges. Why do you think exchanges have such a geographically regional approach, despite being somewhat similar and ubiquitous across, their functionality?
I think some of the nuances might be different across specific markets, but I'll speak for our part of the world. So where we come from, the ability to engage directly with regulators is one element, right? So building the trust to be able to have a regulated exchange in this part of the world is something that you need to dedicate a fair amount of attention to. The second thing that's probably more important is the ability to operate stable on and off ramps. So as you might imagine, a lot of the regional exchanges actually serve as on-ramping into the crypto market, broadly speaking, right? So in South Africa, one of the key questions we had to ask ourselves was, does it make sense for us to start an exchange when, number one, there's already a dominant player, and number two, Binance were actually entering the market not long after we started operations. And what we observed over time was that just because you come in with a big brand and a big name and potentially a lot of capital, doesn't mean that you are able to get the bank account rails set up and to be able to serve customers in a way that is like that they understand and that really caters to their needs, and understanding what problems customers have in specific markets. I think you need to understand that market quite deeply. So in some markets, the biggest change they've gotten this right, but not across the globe, I would say.
Yeah.
And South Africa is a good example, and a lot of Africa is a good example of the fact that when you've got local, regional presence and knowledge, and like we have, I would say, the best on and off ramps in sub-Saharan Africa, that makes a huge difference. And we've managed to beat away what is the largest exchange in the world, right? As a result of that.
Yeah. I'm curious how you speak about like the regulatory nuances, and then obviously like the kind of financial services nuances. What about the customer type and user behavior? Like, people think that Koreans are some of the biggest, degenerates in the world with their leverage and their trading. People think that Americans have a ton of money and they have all these institutions and all these like crazy, firms, similar with like the UK, parts of the EU. Then you've got kind of like Australia, South Africa, kind of South America, kind of Southern Hemisphere, different types of investors, different types of operators, economies. What is the, how would you classify the demographic of the VALR exchange customer base and user base? And like, what do you think about that comparatively to like the rest of the global crypto population?
I'd surprise you, actually. So you might guess that the African market, number one, is very small. And number two, like follows the trend of just some people are interested in speculating on crypto assets or have a thesis about investing in non-sovereign money, getting out of currencies that are inflating and into something like Bitcoin as a means to protect themselves from like governments that are useless. We put it plainly. In reality, for VALR specifically, you will notice that we are actually, our markets are dominated by stablecoin flows. Right, so on-ramping via the local currency, South African Rand in South Africa, into USDT predominantly. And that mostly is for payments use case across institutional customers. So we see a lot of our flow in the business space rather than individuals. And a lot of that exchange volume is related to either remittance flows or even local payments flows. We serve over 1.5 million customers right now, but most of our big customers are actually institutional.
And could you give us some stats? Like, what is the volume that you guys have done, in recent years, recent months? How have you grown over the recent time frame?
Yeah, absolutely. I mean, today, VALR processes anything between $30 to $50 million a day in volume. That is up, like 90% on the last year, and it's up many-fold over the last 5 years. And as I mentioned, like we've got 70% of our business is based in South Africa, and the rest is kind of dispersed widely across the world. We at least 1/3 of our spot volume, which is that $30 to $50 million number, is actually leverage trade on spot margin. And what is new and beginning to grow for us is the perpetual markets trade.
Yeah. And so this is where I think we can get into the integration with Hyperliquid, but more generally, like the growth strategy. How focused are you on still dominating, the South African market and the sub-Saharan African market, versus expanding outwards, expanding globally? And if so, how do you intend to do that? How are you going to take, volume from 50 million to, 500 million a day through product and growth trajectory?
Yeah, absolutely. So a big part of our growth story is absolutely expanding outside of sub-Saharan Africa. We call South Africa our home. We understand the African market well. The opportunities that have not been cracked by global exchanges are in Africa, I think, predominantly, right? There are other large markets like Korea, as you mentioned, Andy, which have like a regulatory moat, right? Like it's very hard for new entrants to enter that market. In Africa, there may not be directly such a strong moat in certain markets, but you definitely need to know what you're doing. And the problems are harder to solve in this part of the world. So part of our thesis is absolutely that the African region is dominated by stablecoin flows. People want to be able to transact using dollars as the medium of moving money. I think that it's pretty well established in African markets that stablecoins are a much better way to move funds than any other network that you've got available to you. And we're doubling down on that thesis and moving into a lot of Africa to try and make that a lot more seamless for both individuals and businesses across the continent. And that's where we believe we do see a 10x growth in exchange volumes and our business, ultimately. The second part to that is, while today, a lot of our flows are business-focused, payments-related, it is also absolutely true that in both sub-Saharan Africa and the rest of Africa, access to be able to invest in what are the most interesting assets in the world is actually, it's hard. It's really difficult to be able to invest in Tesla, SpaceX, even like, raw, straight commodities in a lot of the markets around where we live. And so making it easier for customers to get access to markets and to be able to invest or trade and express a view on markets more easily and more cheaply and with deep liquidity has been something that I personally have been really invested in over time. I got into crypto originally with the thesis of, Bitcoin is going to be the means for me to hedge my exposure to the local South African economy and the currency of South Africa. And that has since developed to, I want to offer to all people in Africa the ability to invest in the assets they want to invest in more seamlessly. That access is low, and it's not something that people are able to just spin up a wallet for, generally speaking. And so that led us into thinking about where we would be able to offer the widest range of markets and through what liquidity that might make sense.
Yep. And I've also heard that the adoption cycle of different like stablecoin financial services products that are blockchain based in Africa is much more seamless and just generally a faster process to adoption than other areas, which I found was interesting. I'm curious if you found something similar. I'm sure it's likely. On the liquidity side of things and on this kind of access side of things, totally understand that. And so when it came to thinking about offering perps and hyperliquid markets to the VALR customers, then kind of integrating that into your expansion plans, why did this make so much sense for you guys? And when you were kind of thinking about the decision, what was like the multi-year, you just kind of laid out the access vision, but what was like the multi-year kind of thought process around what this could lead to for your company?
Yeah. At first, it wasn't obvious that this would make sense, actually.
Sure.
And in truth, this meant going against our instincts based on how we'd historically conducted ourselves as VALR. So why I say that is historically, we have built everything in-house. Everything from our blockchain infra to our exchange matching engine and everything in between, right? Customer accounts, client service, all of this, we built ourselves within VALR. And so deciding to take what you would guess is a competitive advantage for an exchange in having liquidity and having a derivatives matching engine of your own and saying, we don't want to build that now, right? And we should probably look at where we could get the best depth of liquidity, looking forward, not just right now, but 5 years into the future. And what would make sense to be able to give our customers access to the widest range of markets with the best liquidity we could imagine. And that came back to Hyperliquid. And the reason for that is that we've bought into the thesis that, and we actually understand this really deeply, that firstly, liquidity loves to concentrate. It doesn't like to fragment, right? And like what's happened over the last 10 years in the centralized exchange space is that we've got so many exchanges globally that all that does is fragment liquidity if that is the ultimate objective of your business. It's similar on chain. We've got so many chains that have been tested and launched, and people have gone to speculate on over some period of time.
Yep.
And what that does again is fragment liquidity. I mean, like Robinhood may do very well with their chain now, but one thing I'm less excited about is customers having to decide which chain to go to in order to get the liquidity for the asset that they want. And our thesis is that the easiest place for liquidity to concentrate based on their actions is going to be Hyperliquid. And so as a start, we were very happy to integrate into Hyperliquid to tap into the infrastructure that they've built, the liquidity that they offer, and to build a user experience that is within VALR for our clients. So we give Hyperliquid the ability to have more flow through the customers of VALR, which should, in theory, lead to even better liquidity on Hyperliquid, along with everyone else that's doing this. And we control the customer relationship, the regulatory requirements, the fiat on and off ramps in South Africa and soon in many other markets around Africa.
Right. Yeah. And so your users are like KYC'd and AML'd, and there's all these regulatory requirements. Hyperliquid is obviously trading is markets that are made up and comprised of, because this is really interesting, because I don't think this would happen in the US yet, which is where we are. I'm in the Empire State Building. We're in New York. It's a beautiful day out here. I'm looking down at Wall Street. I see the one world trade, and they would never allow this to happen right now in the US. It's still a process. So I'm just curious, like, I guess here in the US, the problem would be that you can't mix like KYC users with like other users who are anonymous. How did you, like, what made this possible? How were you able to kind of, without maybe getting into the extravagant details, how were you able to kind of make this work? Because I think this is a pretty big breakthrough from a perspective of, these perps platforms on chain aren't going to be able to work because, you can't have composability between regulatory or regulated exchange distribution platforms like a Robinhood, like a Revolut, like a VALR, and underlying perps platforms on chain like Hyperliquid who have non-KYC, non-AML users. How did that work, and how did you guys pull that off?
Yeah, the first important point here is that the source of liquidity doesn't need to be the same necessarily as the regulated venue. The approach that we have taken is that the place in which regulation should be enforced is at the on and off ramps for the most part, right? It's in the centralized exchanges that are offering customers access into crypto markets. That should not be so tightly coupled to where the source of liquidity comes from, for all the reasons I mentioned earlier, that if you're going to isolate a set of customers to only be able to interact with each other, you are basically damaging the customer's experience because you cannot have deep liquidity. We tried, actually. We
agree. We agree.
Yeah.
That's why this is such a breakthrough. It's like, whoa, exactly. this is the first of its kind from what I understand.
So I'll tell you something else that's interesting, which is the approach that the regulators have taken here, and VALR is a fully regulated exchange. We've got a number of licenses, including a derivatives license and specifically a crypto license here, is that, another dynamic in this market is that capital is actually quite tightly controlled in South Africa. It's actually fairly hard to move money freely outside of this country. Now, the stance the regulators have taken is, and with our engagement with them, is that it's likely in the future that customers will only be able to access crypto through regulated venues such as VALR. And so the avenue for all South Africans to get access to DeFi is through CDeFi, and it's through VALR, ultimately. And so we had a lot of confidence in the thesis that we could prove to regulators and show them through this integration that this gives a much better experience to customers. They have better execution on trade. They have better pricing than CFDs by an order of magnitude, I think, ultimately. And so we can give a really good experience to our customers and show regulators that they don't need to think that they need to regulate Hyperliquid and other decentralized protocols. Those should be left alone to enable the best possible experience for end users, which in this case, one of the things is the deep liquidity and the best place for asset prices to find the correct match in the market.
Yeah, it's the dynamic is interesting, such that you've gone and taken this regulated stance at VALR, and basically said, hey, bring it on. We can meet those standards, and in doing so, you've put through a position where the DeFi hyperliquids of the world can be left alone, but you can integrate the two and ultimately bring the best of both worlds. Kind of flipping to the other side. As Andy mentioned, in the US, there's a bit of a different approach where, the regulation, stretches very, very deep. And so not everything can be offered. At the same time, we have, the likes of these decentralized network offerings from some of these centralized exchanges here. I'm just curious, because I take it you guys don't really have a plan to launch a chain. Right. But we've seen, the base debacle, what's going to happen with the base app. And we've seen, Robinhood as of late launch these chains. And I'm just curious about your thoughts here, because you've sort of taken a much more patient approach, kind of sat and looked at this and said, we're not going to play that game. I'm curious, even with the success of Robinhood as of late, do you think this is the right strategy? What might change your mind in this regard? And just a word, in what you're seeing out there, what is your reaction to, the bases and the Robinhoods of the world?
Yeah. I think this comes to the core of what are you actually building your exchange for? And what is your actual long-term thesis and intention with building such a company like this? I don't want to, insult anybody, but I do think a lot of exchanges just have a pure profit motive, right? Now, it sounds pretty, flippant to say this, but one of the reasons that I'm still at VALR is that we actually have a little bit more of an approach driven from a standpoint of how do we actually bring the most value that we can to customers in our market and around the world. South Africa has been starved of good investment opportunities, of decent ways for customers, for people to be able to protect themselves from inflation and to grow wealth, right? Yeah. And I see that every day because I live here. And so for me, I have to. It's maybe easier to just zoom out and not be completely profit driven and have the motive only of growth at all expense, and to think what actually drives value for people. Because I do think ultimately that's what allows you to continue to exist for decades to come, is how much value you actually deliver back to the customers that you're serving. And so for us, we had to take a humble approach here, right? Yes, we could say to ourselves, launch a token. VALR has no exchange token at this time. Launch a chain. Try to eat as much of the pie as you possibly can. And we had to avoid falling into those traps we think they are, right? And say to ourselves, maybe DeFi and CeFi serve different purposes and have different problems to solve. And so our view is currently that DeFi will be the place where liquidity likes to congregate and pool. And CeFi, or centralized exchanges, are going to be the people that own the customers and ultimately have the relationships and make sure that they can serve those customers as best as they can. Yep. What would change my mind is if something happens that destroys the idea that liquidity can congregate on chain, right? So if it so happens that these blockchains just all get hacked because of AI, or that there's something else like a massive regulatory push to clamp down on these protocols without understanding the thesis that I mentioned, right? That it actually leads to customer benefit to allow that kind of innovation to happen. That would probably change my mind, because then it's not possible for this thesis to play out. But I really hope that is not the case. Yeah. And I have confidence that it won't be, actually, ultimately. Even for you guys, hopefully the Clarity Act does get passed. Right. That may have create some improvements, maybe not. We'll have to see, I suppose. But regulators that I've engaged with, thankfully, have taken an approach that is moderate, not one that's super aggressive. The markets that have been super aggressive have just failed as a result of that.
Yeah. I mean, it's almost like the genie's out of the bottle at this point. It certainly is on things like Bitcoin, and you could argue for Zcash as well here. They've tried to shut it down so many times. It fails every time because you can't regulate math. You can't. It's just, something that people have realized at this point. And, it exists more in the people's minds. You can't just take that away from people. When it comes to liquidity pooling and congregating on chain, it's, a matter of will it be able to reach scale and continue to grow? If it does reach a significant size, does that pose a regulatory, does it become so much of a target for regulatory that, they end up attacking it? I think maybe we've already overcome that as well. And it becomes to such a size where it's almost too big to fail at this point. And now we're starting to see the transition. We're starting to shift where, it's gone through the messy growth pain of getting to a significant scale. Now the largest institutions in the world are realizing that, they're actually better off with this existing and joining it rather than fighting it. They spent so many years fighting it, right? That would have been the time for them to destroy it. Since that they weren't able to do so, it's now time where it's better to beat them, it's better to join them than beat them, because they realize that they can't beat us any longer. So with that being said, it feels like we're overcoming, we're at the precipice of overcoming some of these regulatory concerns, and, DeFi almost becoming invincible from, those potential threats of, and just being able to sustain a place where liquidity can congregate. And then with that premise, and I think it is important to challenge that assumption, but it feels like that assumption is pretty strong at this point in 2026, then we can build from there. Then we can build the front ends, the regulated front ends. We can build the centralized exchanges. We can build the payment channels. All of these things are going to augment and ultimately optimize and scale the liquidity congregation place that we have such a strong foundation of. So it's exciting. I feel like we're in a place where we've got a very strong foundation. We've got a lot of direction we can build. I anticipate, and maybe in a conversation from another time, we'll get into the RWA strategy, the institutional strategy, all these sorts of things, the AI strategy, because this feels like now we've got the core principles of DeFi. Those aren't going anywhere. It's time to build around this and scale from here.
Preach, brother. Same page.
Yeah.
Awesome. Well, Gian, thank you so much for joining, man. Absolute pleasure. And you've absolutely crushed it thus far. Would love to have you on again. Congratulations on the integration with Hyperliquid.
Yep.
And man, we're going to get this 50 million a day to 500 million, 5 billion, and just keep on keeping on, man. Keep up the good work.
Appreciate it, guys. Thanks for having me.
Thanks,
Absolutely.
Gian.
We'll see you next time. Thanks,
Cheers,
Gian.
buddy.
All right. Thank you.
Cheers. Alrighty, guys. We've got Leo up next, the founder of Cysic. Rob, bullish. That is the question. That is the, do we need different lighter instances for different liquidity sources that are regulated or not? Or do we just have one market on chain for everything? And one guy in the chat, One Arm Bandit, keeps saying, we are building one world market for all markets, friends. Learn fast, stack faster. I mean, pretty funny, but right? Like, is that not what we're doing here? Like the competitive thing of like, oh, all the centralized exchanges are just competing with each other for liquidity and for pricing and all this stuff. Like, yes, because you can make money that way. That is what this guy is saying. Gian's saying, yes, that's the best way to make money. But like what we're really trying to do here, and imagine a world where all of those exchanges based on their current volume. This is going to sound silly. All the centralized exchanges are based on their current volume, statistics, and OI. Congregate all the liquidity into one venue. Take an equity share relevant, some math formula relevant to their size, their revenue, their OI, and their liquidity. And now we just have one venue. And obviously you don't just want one centrally planned market, but you get a couple. And that's kind of what you end up having anyway. Like what do you get? You get Bybit, OKX, and Binance. Yeah. The market kind of gets you there by just means of natural selection and by means of market forces. But yeah, it's just interesting because it's like, people are just kind of like, there's like going to be this new push of like, all right, we're just going to piggyback on Hyperliquid. Mm-hmm. MetaMask, Phantom, VALR. Who's next? CME. Oh, all of our futures contracts are just going to be traded as perps on Hyperliquid. Right? It's like, okay, wow, like what are we talking about here? So like builder codes and that are really, really interesting. And these potential instances of lighter, really interesting because it's like, yeah, I mean, it completely shifts the incentives, right? For VALR. VALR is like, we don't even need to talk to market makers. We don't even need to talk to liquidity providers. We just need to go and get distribution, get more customers. Like it changes the whole game.
And there's a really succinct way to put this that we say all the time on the show, which is liquidity begets liquidity.
Exactly.
And that world market point of view is when you take liquidity and you do a good job with it, you protect it, and it continues to grow and it continues to scale, that liquidity ends up becoming really, really large and subsuming like all of the global liquidity out there.
Correct.
And especially now, we're in a position where we are getting a little bit more regulated. There's goods and bads. There's trade-offs with that. One of the trade-offs and the pros is that you end up with a tokenized asset class that was never before part of this composable liquidity network.
Exactly.
And that's tokenized equities. And that's a $27 trillion asset class. And now that is liquidity that is coming in and combining with the existing liquidity that, is on chain with crypto native assets.
100%.
And so, we've unlocked
100%.
the next sphere of liquidity that can get more liquidity, and this thing is just going to continue to grow. And I think previously this wasn't, financially, this was always the most efficient way to do this, but it was an engineering problem. We weren't able to compose this liquidity together until we had the likes of a blockchain and then smart contracts. And then, these different modules that could plug into one another. And ultimately that's where we are today. The reality is that, if you start from, just put it this way, Ethereum and Solana are more composable than like Charles Schwab and Morgan Stanley. Previously these things were more disparate, and you might say that this liquidity isn't as composable as it could be because they are on different blockchains. But the reality is that the current state of the on-chain economy is more composable than the previous state of the disparate brokerage economy. And so we're moving in the right direction. Interoperability is going to continue to improve, right? This composability is going to continue to improve. And this is going to beget even more liquidity because it's even more efficient. And so I think that's absolutely the case. We're going to continue to see this. This is going to continue to subsume even more asset classes, and they're all going to end up on chain. And I think ultimately that is like one world market where liquidity congregates. And then you plug in what we heard from VALR, and it's, different front ends that are regulated in different ways, different jurisdictions. They provide KYC and AML, different distribution channels. Telegram is a front end, VALR is a front end, centralized exchanges. You have all these different portals, but they all give you this interface or medium into where the liquidity congregates, and that's just on chain. Doesn't really matter what chain, because it's going to get increasingly composable. So I think that's the right mental model. That's the right model of the liquidity world that we live in today. And I think it's going to get increasingly composable, increasingly liquid across all the asset classes, and increasingly distributed to everyone in the world.
If Lighter and Hyperliquid get CFTC licensed, sexes are going to lose their market share fast. It would be interesting to see how that happens. It'd be interesting to see how centralized exchanges, if there's a transition of just like moving their books on chain, that'd be a very, very strong signal. So guys, we've got AI Supercycle episode coming up here with Leo Fan, the co-founder of Cysic, the CEO. We're going to talk a lot about AI, the state of the AI market. There's a lot going on between US and China. There's a lot going on with compute markets. There's a lot going on with the financialization of compute. There's a lot going on with open source versus closed source models. So we're gonna take a super quick standby. We're gonna get Leo set up, and we'll be right back with AI Supercycle episode number 43. See you guys in just half of a minute or so, 30 seconds.
If you're serious about crypto, this is where you need to be. The Rollup will be broadcasting live from the Rare Evo Expo floor on day one.
Welcome back to AI Super Cycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Alrighty, guys, welcome back to AI Super Cycle episode number 43, our premier weekly AI show powered by our friends at Near. Visit near.ai, near.com to get started on your on-chain journey. Start using their private inference tools, and more fully quantum proof release happened recently. Today we have Leo Fan, the founder of Cysic, a full-stack compute network, turns GPUs, ASICs, and spare compute into a variety of different assets. Focusing on verifiable AI. Leo is a Cornell CIS PhD and a deep researcher in both the ZK landscape as well as AI. Leo, good to have you back as always. The state of AI is quite rapidly shifting. There is new sectors being created: memory, storage, compute, inference. There's investing happening in the stock market that's going crazy. There's the nationalization of AI between the US and China. There's the compute bubble. There's the open source versus closed source. There's just a lot to cover. Leo, good to have you, man. Thanks for joining us.
Hello, hey, how are you? Like, let's
Great,
hear a lot of like buzzwords. Like we're here to sort them out.
Yeah, beautiful, Leo. Well, great to have you back. I guess just to start off, man, this is what the people want to hear about. There has been a release of Kimi K3 model as of late, which is challenging the assumption that the value and the pricing structure of inference and compute, both, but primarily the actual intelligence that you're paying for with a given model, is significantly overpriced by the labs out west in San Fran. And the frontier labs are kind of in this race to figure out the best way to kind of rival what's happening out in China, meaning that there is a lot of similar intelligence being produced at a significantly lower cost with these open source models. And it's kind of causing a lot of rhetoric around, is this AI bubble over? Because we've, gone through this token maxing phase and people are really just looking for answers. Leo, from your perspective, what is happening right now with the pricing of these models and of this intelligence as it relates to the open source kind of push out of China and the frontier labs pushing back against these models, and at the expense of their profit margins, they would like to keep their dominance?
Yeah. So to be honest, as a like grad student like coming out of China, like I don't think like right now the open source model like from China is like catching up with the closed source model like from the United States. Yeah, as you know, like although like the Kimi or like the DeepSeek, they are like catching up, but there's still like some gaps there, like probably like several months gaps there, like to be catch up with the latest model from say like OpenAI or Anthropic. You can always like engineer this like model, like the say like Kimi or like DeepSeek to be like perform like very well in some like benchmarks, but like if you do it like in a like very broad way, like to do it like in the different tasks, like I don't think it's still like right now on the same par like for the like US like closed source model. So which means like I don't think like right now the bubble is over, and it's still like several months like we are like catching up like from the open source model. Yeah, so that's like we try a lot, like we get like a lot of like this like native model from China, and based on this model, based on like our experiments, for all the like the different tasks, and I like right now still like several months gap between probably like you can say like Kimi right now is like on the same level of like Opus 4.8, but it's not as good as like Fable 5, like in general task. Like of course you can engineer this like model to be like perform very well like in some task, but like if you want to do it like in a general task, then I don't think it's like on the same par. Yeah.
And let's talk about how these models are affecting the compute market, because right now, there was Kimi came out, there was a massive influx of users that went over there and started using it. And then they had to shut down because they realized that their servers were getting maxed out. There was, they couldn't keep up with the compute demand. And so they didn't have it in order to supply. You guys are on the compute side. And the theory is that like, hey, why am I going to pay for the premium compute of, one of these frontier models when, in a couple weeks, they're going to catch up and I can just use maybe it's 5% degraded performance, but it's like 50% or 80% degraded cost, right? And so how does this look on the compute side? I would imagine that every time there's a frontier model comes out, everything gets maxed out, right? And then there's a compute bottleneck. Do you think compute is still the bottleneck or has it been commoditized? How does the compute market react when there's a new model that comes out?
So I would definitely say like there is a huge bottleneck in the compute side. Yeah, since if you use the latest GPU card to train the model, you still have to use some other card to inference based on the train model. And the inference card will be stay close to the users to have a nice user experience. Yeah, so for that one, if you try the Kimi, the latest model from Kimi, you can see the response time is very, very long, and also the token price, I would say is on the same price, on the same level of Opus 4.8, probably a little bit close to Fable 5. Yeah, so which means if we have enough computing resources, since Kimi is an open source model, we can download the open weight and then we run it by ourselves and then we do all the things by ourselves. We can generate the token for the users. But right now we cannot do that since the model is very large, which will cost a lot of VRAMs to do the inference based on the model. And as you can see, right now, the memory and also the GPU cards in shortage, which means we really cannot get enough computing resource to do the inference. Even if we have the the open source model there, we cannot have enough resources to do the model. Like Cysic, we are right now doing the decentralized AI, which means we are using a lot of GPU cards to generate tokens for our products and for the products which will be consumed by our customers. But we cannot get enough GPU card to do the inference for our customers, which will cause this shortage.
Yeah. Okay. So there's a shortage of GPU cards that is causing an inference shortage. Is that correct? Yes. Okay. And so those GPU cards being in a shortage causing less, or a shortage of inference causing the price of inference or intelligence kind of, effectively to go up. And so you're saying that even though there's this significant progress happening on the open source models from China, they're still, equivalent to, the Kimi K3 might be equivalent to the Opus 4.8, but not Fable 5. But you're saying that that's not even the problem for the cost of the compute. The problem is not about the intelligence at that inference level. The problem is about the shortage of the GPU cards that is leading to the price of those going higher, and thus the price to even obtain that intelligence is thus higher because you have to get the GPU card and then, get access to that inference. Is that kind of right? Yeah.
Yes, that's right. So actually, in addition to the GPU card, you also need to have enough memory to store the models locally to do the inference.
Okay.
If I remember correctly, Kimi K3 has 2.5 T parameters, which will cost a lot of memory to store all the parameters inside to do the inference. So that's another problem in addition to the GPU shortage. So you need to have the GPU plus the memory to get the the nice inference results for people to validate actually Kimi is doing actually better than Opus 4.8.
Yeah. Okay. I see.
And so this is something that we saw play out in the market, right? Because initially this started out with okay, AI is a huge opportunity. The mega cap stocks like the Googles and the Metas and the Microsofts, these are the hyperscalers, and they were going to, raise money to go build out their AI infrastructure. Then once they got that money from executing these bond sales, they started spending all of that in the market in order to buy up all the infrastructure that they needed, the raw materials that they needed to create and produce this intelligence, right? And basically, create these tokens. And so then they started, spending on RAM, they started spending on memory, they started spending on the semiconductors and all of this, right? And we saw that take place in the market. I'm curious, what comes next, right? We saw the growth of the hyperscalers. We saw the growth of the frontier model companies. This happened in the private market and the public market with hyperscalers. Then we saw this rotation where all this capital expenditure went into the memory, industry, that went into the semiconductors. Now, once, they start to put this capital to work, the memory companies and the semiconductor companies, now they need to go buy raw materials in order to produce more semiconductors and more memory. What is the raw material that is used in order to create the semiconductor? Is it silicon? Is it what is the next step in the supply chain where the memory companies and the semiconductors are going to start to allocate capital?
So before moving to manufacture more chips, I would say actually we can use some the current probably not the latest chip to also to deliver the same result if you dive into the engineering effort more. For instance, if you want to say run DeepSeek V4 Pro, which is open source model, probably the strongest open source model before Kimi come into the place. You can use 4090 GPU card to do the same delivery than say 300 cards. Yeah, you can use say probably 16 4090 GPU card to deliver the same results which will be the same from this 8 B200 GPU cards. So there are a lot of engineering effort we can dive into to deliver the same result with say probably the current or the not the latest the hardware we got. We can still deliver that. But so that's for the inference part. But for the training part, we still need the latest GPU card to get the best result, coming from the training. But after the training, you can use some other, say not the latest GPU card to do the inference. So there is a gap, and we can use a gap to deliver the best results. So that's something before moving to the new chips. For the new chips, I would say right now we are moving from 5 nanometer to 3 nanometer or even 2 nanometers there. And yeah, it's not about the materials, it's about how you can have very advanced cards on the chip to make sure you can have a very precision things to cut the chip, to cut the things in the say the figures or in the diagrams you want, and then you can deliver the results. And of course the yield or the the positive of the chips will be still as high as say the probably 90% from the some previous nodes. So how we can get that part, how we can use a very advanced node to do the chip card, compare with something 5 nanometer. So that's the bottleneck. We still want to get a very high yield. Want to get a very high positive results. And we don't know that. And the materials is not a very much bottleneck. We can always get the real chip from the sand. So that's not something we worry about. But how you can use the current precision to get the very nice chip out of the say the wafer. So that's something we are more concerned about.
Yeah. I'm curious about something else with regards to the AI rollout. Who do you think seems more prepared for this AI rollout, US or China? China's got a ton of nuclear power plants that are approved to start building. The US has been far slower to approve nuclear energy. There's obviously other kind of resources like copper and some other kind of rare earths that are becoming kind of popular and wanting to be acquired by governments and private companies. How do you think about the rollout here globally, whether it be US, China, Europe, et cetera? How do you think about the advancement of this technology? Who's best prepared and suited to kind of roll all this out at scale?
Okay, that's a very risky question to ask.
Okay.
Yeah, so
well, then we can just move on if you want.
Yeah, so like I have like some very wild prediction. Yeah, since like as you can see right now, like the US, like the states, they have like open AI or like Anthropic. They are like have this like closed source model. This closed source model will like attract like more users to it, and more users will like attract more capital to it, which will like causing this like flying wheel. But there's like the previous days like coming from like DeepSeek, where like DeepSeek they show like you can actually use the open source model to get almost the same result like from the closed source model, and then like I mean like the most recent one is coming from Kimi, which also show that if you can use like say the open source model to get almost like the nice result from the closed source model, which I actually like I think like will cause some alarm for the US companies. They will think probably they can like dive like more into like how they can like doing the exploration on the research sides like for the model instead of doing some like marketing or like access control to say like how the users can control their model, like how they like want to bind this like users, like to explore like more on the research side instead of like more on the like marketing side. So like in that way, then they can like compete like since like the Chinese company, they just open source like all the way there. Like you can just download if you have like enough like GPU resources, you can just run the model. But for the US, like they are like all like they are like opaque to the customers. So I guess it will like the competition between these like two countries will like be like better for the customers. As customers, like we are like using the latest model, we are like doing the best leverage on the components to get the best result of ours. I would say like I don't have a like prediction for now.
Yeah.
But like this like competition between these two countries like will be like very good like for our customers to explore. It has a like very large space for us to deliver the best results like for our like customers.
Yeah, I think we agree. I'm curious what your thoughts are on some of these compute financialization happenings. So, Kalshi launched this daily compute product where you can speculate on the hourly price of a NVIDIA computer for each day. There's compute perps that are starting to come up. Like, what do you think about, and maybe you could explain to us the different actors who kind of make up the compute supply chain and why having the ability to like hedge your costs or the price of compute or go long or short as a company involved in the AI supply chain makes sense? Like maybe you could just kind of explain and give us your take on the financialization of compute as a new asset class. Some people are saying that it may be the biggest derivatives market in the world in the next couple of years.
Yeah, so like as I say, we have this narrative called ComputeFi. So the ComputeFi, which means you can financialize or commercialize like your hardware. But it's like very different from like they say it's like the DeepIn. Like the DeepIn like it's just you own the hardware, but you don't know how to program the hardware like for the different like computing demand. So that's a very big difference. So ComputeFi announce like the user, like I mean the compute providers which own this like hardware to use some like native software to program their hardware to suit for like different compute demands. For instance, like for like previously, like the majority of like our compute demand is coming from the ZK proof generation. But as you can see, like since the layer twos are like declining, like we are shifting a lot of like our computing providers to the AI providers. So the AI providers will still like having the same hardware, but they are running like different software to provide these like AI tokens to say like SIOPs or a lot of like AI products on Cysic. They are like still like making a lot of like profits. Probably like they are like only the same hardware, but they are like running different like software to still getting like a very nice yields. So compute fund, like in our opinion, like will be how you can program, how you can incentivize like people who own their like hardware to devote their like hardware into like new, say like emerging like markets. Yeah, so like as a project in this like market, like Cysic is like doing our best to adapt to the market, to trying our best to get the most out of like the yield of the hardware owners.
And what is the opportunity here? Like, say we have some, GPUs lying around, or just, a spare CPU MacBook, right? This is compute that we can contribute to the network. If someone missed out on mining Bitcoin, can they, start mining some tokens and get in on the game? What kind of yields can we expect from these things?
Okay, yeah. So it depends on the category of the hardware. Like he say, like if you have a Mac, and the Mac, as you can see, is like very probably like it's not very weak, but it's like somehow weak in say like the VRAMs and also in the GPU processing. So like in that way, like you can use your like say like the your MacBook to do some ZK proof generation, and also to verify the ZK proofs. Like instead of like doing some like the AI token generation, since like right now, if you want to run say like for this like AI models on your MacBook, it will be like a very small model, probably like it's like 0.5 or like probably like at most like 1 billion parameters model on your Mac. And the like one billion parameters like models will not like doing like very good in the profit like for you like on your MacBook. But if you have a like very powerful say like the GPUs like say probably like H like 100 or even like A100 or like B200, this kind of like GPU cards, of course you don't want to use that to do the ZK proof generation. So that will be like a waste of your like the hardware. You will probably use that to do some like AI training or like AI inference, which will generate a lot of like tokens, like for like like the AI tokens instead like the crypto tokens. So you can use the AI tokens like to get a lot of like profit. So it all depends on like what kind of the hardware you want. Like in Cysic, we have this like infra bench will coming up soon. So you can use the InfraBench to test your hardware to find out like which hardware, like which model you are getting the best based on your common hardware. So I would say that's like a very great way to find out how you can get the best of your hardware.
Yeah, Leo. Last thing from my side, just thinking about where the financialization of compute is going. Do you think that this could be one of the largest commodity derivative markets in the world? Oil, gold, Forex trading, for example, these things are massive markets. Do you see the derivatives market for compute growing significantly to rival some of the largest commodity markets in the world?
Yes, I do see that. Like I see a exponential growth of like the market for the market for demand of compute. Yeah, as I just previously mentioned, like the models are growing like larger. Like to train this like larger model, like you need like the like more powerful like GPU card to train the large model. And after training, you still need a very powerful GPU card to do the inference for this like very, very powerful model. so like so at least like in the say probably like coming like 1 year or two, like I don't see any like declining like in the demand for computing. Yeah. So that's like all due to the increase due to the demand of the AI computation.
Yep. Leo, thanks for joining the show today. This has been AI Supercycle episode number 43 with the co-founder of Cysic on the state of the AI market today, US, China, compute, financialization, the inference battle, and more. Leo, thanks for being part of the show, and keep building in this financialization of compute market as we both expect it to grow significantly.
Thanks
Thanks
Leo.
a lot.
We'll see you next time.
Thanks a lot.
Alrighty, Leo.
Nice chatting.
See you soon.
Thank you.
Alrighty. It's happening, Rob. It's coming home. The financialization of compute is happening, and it will continue to. So, pretty good segment there, Rob. You saw some breaking news, didn't you?
I think we got to do some breaking news. I think we got
what
to
happened
interrupt
out there?
this regularly scheduled program for some breaking news. Let's go ahead over to our breaking news segment.
Yeah, I mean, what? Breaking news, Rob. Vlad has been hacked.
I still have a screenshot here.
Yep. Vlad has been hacked. The CEO of Robinhood had his X account hacked, promoting Vlad Hood coin. Was 70% bundled on Bubble Maps and is a complete
Scam.
scam. Yeah. I mean,
that's
there's
a
no
rug.
way to put it.
That is a rug, and that was posted from the CEO of Robinhood with a contract address.
Yes.
Not cool. I saw the deployer was able to extract at least 18 ETH from one of the screenshots in the comment section of that tweet. That was up for over an hour. I don't know how they did not take that down sooner.
I mean, yeah, that's a public company. That's a public company CEO getting being welcomed to the meme coin casino.
Yes, that is one of the two wolves that are inside all of us at any given time.
I mean, when you are going full crypto meme coin tweeting, you're just going to attract the people that are going to try to extract. So Vlad had his account hit. Seems like it's probably back now. The tweet's down. Speaking of that, let's get into the next piece of news. Hype, Hood, and the crypto bull market from our friend Matt Hoogan. Matt is a Bitwise CIO of Bitwise. Hype, Hood, in the next crypto bull market. Kind of ironic given the state of Vlad's X account today. But Matt in this piece effectively highlights the focus on crypto apps with revenue, strong tokenomics, and the convergence. And he writes here, if the bottom is in, what will lead the next crypto bull? And the answer is clear: the convergence of on-chain and traditional finance. And crypto is showing its early bottoming signs. Bitcoin up roughly 9% since July 1st. ETF flows improving and sentiment turning more constructive. The next bull market theme is the on-chain TradFi convergence, which is what Matt is arguing here. Stablecoins, tokenization, 24/7, and institutional DeFi. Hype represents the crypto native side. Hood represents the TradFi side. And that is the way that you want to structure your barbell portfolio for the bet on the next bull. Rob, I do not own any Hood. Obviously own Hype. What's your take here?
I think you might get a good buying opportunity on Hood after the CEO of the publicly traded company got hacked. Typically doesn't reflect well in the share price, but
Nothing really today on that.
this thing just happened. It could have been real, could have been a real tweet, but it's not. I think ultimately shows some lapses in security.
ISO just made 80K from it. Wow.
Yeah. So that's gonna do wonders for a hacker. But look, we know that the greatest benefit of this technology is going to come to those who implement the technology.
Right.
Not necessarily the asset holders that have always been here, but those who implement the technology. And look, earlier, we had a friend of the show from VALR, Gian, who talked about how, he is not in a position where he's going to launch a chain, but there is a profit motive here. And if you're looking at just the pure numbers, the reality is that chains make a lot of money.
Yeah.
Are you going to churn through your user base and they're going to lose a lot of money on meme coins? That's a different conversation. Are you going to do that churn and then the institutions are going to be left and then they're going to see a ton of RWA volume? Again, another conversation. The reality is that there's a lot of money to be made here. Hood implemented this. I think there's a potential to not only grow their revenues with a new user base and a new asset class, but there's also a method to decrease some of their expenditures by making some of these settlement features and some of this money movement more efficient.
Yep.
And so I think it can do some pretty good things to their bottom line. Yep. And therefore, if we're looking at the pure fundamentals of this company and we're looking at their bottom line, I would expect it to do well as one of the teams that is going to implement this technology.
Yep. And they have a ton of other business lines, so it's not just that they're just doing crypto. That's for sure. All right, let's keep it rolling into the next piece here. Arthur Hayes founded BitMEX, the pioneer of perps. BitMEX is shutting down. I remember when I was trading on BitMEX in 2017, lost it all at the end of the bull. Sad days for the boy. But Arthur, they're riding off in the sunset with 3,000 Bitcoin in the insurance fund. And they're done. BitMEX token fell 96% on the news and it's over. The era of BitMEX is over. It's kind of a bit of a nostalgic announcement for early perps traders in the space. If you were trading on BitMEX, you were one of the first ever users of the perpetual future contract in human history. So you are a part of that lore, you are a part of that history, and now it's coming to an end.
I didn't realize BitMEX had a token.
Yeah, they do.
You can just wind down tokens like that?
I don't know if it was wound down. I think it was just, it was dumped to zero.
Yeah.
BMEX.
Yeah, sort of nostalgic, like you said. BitMEX, one of the pioneers of the perpetual contract. Saw some misinformation floating around. They did not invent the perpetual contract.
No.
They did popularize it. They also combined the perpetual contract along with 100x leverage.
Ooh.
But the perpetual contract was invented by someone named Robert Schiller. Yes. That's a real last name. Schiller. And the fact that Mr. Schiller invented the perpetual contract in, I think, the 1990s is just an almost unfathomable piece of lore.
Robert Schiller.
And of course, took a little while for it to get popular. It was, originally thought of as...
Yahtzee.
What's that?
R.I.P. Yahtzee.
Yahtzee.
You're right, Edward. R.I.P. Yahtzee. All right, let's keep it rolling into the next piece here. Before we do, let me tell you about 1inch, your secure, efficient platform for tokenized RWAs. Whatever asset you're buying, swap it at 1inch.com. 13 chains, no bridging, available now for you guys wherever you are on chain. Coin Bureau says that Hyperliquid's open interest perpetuals climbed to 11.5 billion, highest level since the 1010 crash, which is awesome. That is awesome to see. The fundamentals for Hyperliquid are continuously saying pretty strong. But obviously the market is having quite a bit of a pullback. And, you just wonder, for how long can HIP3 OI go up? How long can the total OI go up, the total volume of non-crypto pairs before the price has a rebound as well, or at least a significant bounce? Total open positions have climbed to over 320,000. And the derivatives market on chain is fully back to where it was pre-1010, which is saying a lot because that took a lot out of the market. It was really, really destructive. And now we're beyond it. So bullish news for Hype, bullish news for the on-chain derivatives markets. And, let's get this OI to 50 bill.
Great tweet from Lorenzo of ARK Invest today that said this week was the first week that volume from non-crypto assets, meaning HIP-3 deployments and RWAs, exceeded that of crypto native assets, which I think is
every other DEX. Hyperliquid's RWA market alone was larger than the combined crypto perpetual volume of every other DEX.
Is that from the same tweet?
Yes. Total DEX perpetual volume last week, 79 billion. Hyperliquid was 50 billion of that. Of that, 26 billion was HIP-3 RWA trading. So the RWA, it wasn't, so it was very close to being, it was very close, or it was over, it was larger than every other DEX combined.
Wow.
Yeah, just on RWAs. His book is great, Irrational Exuberance. Who's that, Schiller? I think so.
Yeah, I believe so.
Yeah. So, interesting times. Let's keep it rolling into Clarity. Bitcoin Magazine is highlighting that Bloomberg's intelligence view the Clarity Act has a chance of 60% chance of passing Congress. The bill described it being as the 1 yard line, reflecting growing confidence around final passage. The Clarity Act would clarify oversight roles between SEC, CFTC, ICOs, capital formation, securities, commodities, segregation of customer funds, giving banks, asset managers, and crypto firms much more of a green light to do more in the space. Let's hear about this from this reporter from CNBC, from Bloomberg.
Was just telling us digital assets are gaining alongside crypto stocks after Treasury Secretary Scott Bessent said the Clarity Act is at the, quote, 1 yard line. Nathan Dean is senior government analyst over at Bloomberg Intelligence. He's been closely tracking the Clarity Act, and he joins us now. Nathan, what can you tell us about what key hurdles have been crossed as a result that has put the Clarity Act perhaps on course for passage sometime soon?
Yeah, so there were really two hurdles left, and the first one that Secretary Bessent is talking about is ethics language. Now, it was reported last night that President Donald Trump has signed off on the ethics language that's in the text that we haven't seen, but it's important to note that the Senate Democrats have also not seen this. So we are cautioning our clients that Senate Democrats may have a different take, so just keep that in mind. The other hurdle that's out there right now is language tied towards essentially bringing crypto platforms like Coinbase and Robinhood up to the same level of scrutiny like banks when it comes to Bank Secrecy Act, Know Your Customer, and customer protections. But I think both can be resolved, and that's why we're at a 60% chance that the Clarity Act can pass this year.
This year, do you agree with the Secretary that it's at the 1 yard line?
I do. The reason being is the Senate is here for 2 more weeks and then they leave for the August recess. And if it doesn't pass before the August recess, look, it's going to face a very challenging future because September is going to be tied up with the government shutdown and then we're in election season. So what Secretary Bessent is essentially saying right now is the time to vote on this. Yep. And I do think that Senate Majority Leader John Thune is going to schedule a vote and put both folks on the Republican and the Democratic side of the aisle on record. Are you going to be for this or not? And that's why one of those pressures, I think, eventually convinces enough Democrats to go along with it.
Yeah. I mean, that's the state of things, right? Like we've heard that a couple of times. Trump signed off on the ethics bill. The Democrats may not agree with it. They may not sign off on it. Yeah.
We've
2 weeks
seen,
left.
I mean, at this point, we've seen the ethics language. We know what's in there. I think the result was that, the protected officials in the government, including the president, the vice president, and some others, had to put their crypto holdings into a trust. They couldn't have control over it. I think we also saw on there that there was absolutely no meme coin launches or crypto launches that were going to act as fundraising tools for members of the government. So this was part of the ethics language as well. None of this meant that Trump had to give back the money that he made. He made over $1 billion.
No, yeah, exactly.
I mean, I got something here as of an hour ago. Senator Elizabeth Warren says the latest Clarity Act draft fails to stop Trump from profiting from crypto, weakens investor protections, and should be dead on arrival. I think that's just factually incorrect.
Classic Elizabeth Warren.
And so I think she's off her rocker as usual.
Yeah.
Does it stop Trump from profiting from crypto in terms of the money that she already made, or he already made? No, he gets to keep the money. But this should prevent, or at least stop, him pushing this meme coin on people. Or there was also this fundraiser or event in which the top 12 holders or 25 holders of the
went
meme
to the
coin,
White House and stuff.
Went to Mar-a-Lago and were able to chat with him and have dinner with him. And, that was a real thing, right? And I think those are the sorts of things that are going to be prevented. And so that's kind of where we are right now.
Yep.
I mean, I'm also realizing that this isn't just the only thing that Congress is voting on in the next 10 days. They just put through a war military package deal.
Yep.
There's so many other industries that are going to be trying to put bills and acts and things in front of the Congress desk that they're going to try to get them to vote on.
You're right.
It's not just the Clarity Act, even though that's what we hear all about. So Congress has a very, very busy couple of days. Also, I've been hearing more and more about this, but the government is just going to shut down. There's a big, is it going to shut down? Is it not going to shut down?
Yeah.
It just sounds like it is. It's just a foregone conclusion this time.
That it's going to shut down.
It's going to shut down. It says funding for the current fiscal year expires at midnight on September 30th. To prevent a shutdown at that time, the U.S. of Representatives recently passed a short-term stopgap measure designed to fund federal agencies through December 4th.
Yep.
The legislation is currently in the Senate for negotiation. I guess it sounds like that's probably not going to pass the Senate, and it's going to get shut down, which is just going to slow things further. So it really does seem like, this thing has got to happen by August 10th, or it's not going to happen at all.
What is going to be the focus from crypto space after this bill is passed? I mean, probably just the implementing of the bill, but then it's just going to be the next bull market. So it'll be surviving another dip, or the dip has stopped dipping, and then it's going to be kind of turning towards which stable coins are going to start to get a lot more issuance, which banks are coming in, what the perps landscape is going to look like, getting more clarity, no pun intended, on the different kind of sectors, I would say. Clarity at the 1 yard line, just like the Seahawks were.
Seahawks definitely threw an interception there at the 1. Should have handed it to Marshawn.
Yeah.
Went beast mode.
All right, let's keep it rolling past Clarity into our next piece. Quick shout out to LeFi, building infrastructure for cross-chain swaps, bridging, routing across the on-chain economy, universal market, access for digital assets. Visit lee.fi to learn more. Rob Haddock is arguing that attention is becoming the dominant currency across founders, investors, journalists, and public officials. His post suggests that even groups traditionally driven by money or outcomes are increasingly optimizing for visibility. Haddock warns that chasing reach can come at the expense of truth, originality, and long-term value creation. Interesting. What's the takeaway here, Rob?
I don't know. I'm looking at whether government shutdowns are typically bullish or bearish for the crypto market.
Yeah, I'm about ready to pull my screen up as well. Let's cover this last tweet. We're going to keep this thing rolling.
Let's do it. Attention, I think, makes a ton of sense. I mean, how long can you keep attention going? You obviously need to direct flows. Look, fundamentals, I think, can get you so far. But, if you have a good product, that's what people want. You need to get that into people's hands. How are they going to find out about that product?
Yeah.
I don't disagree.
Distribution in this AI world is everything, you can code anything. You can build anything. You can what you can't do is get a customer. That's why we do live, guys. This Claude robot's not going to be able to replace Rob's smile. You all need new hairdos. Hey, come on, buddy. Take a lap. Take a lap there, buddy. Take a lap.
Catman Jovi. It's the first time I've seen Catman Jovi. I think we would have recognized that username.
All right, let's pop over to the charts here, Leo. And we'll do some daily equity after as well. But yeah, we've got some charts to go through. I don't know how you guys are feeling out there right now. Looks a little bit bleak. Is Bitcoin at support? Is it going to bounce? Is this rally over? Is our alt cooked? I mean, I think we're looking better than what could have been, but yeah, I mean, I also have this crazy Moonboy Zcash chart to show you guys that I think you'll like.
Crazy Moonboy.
So here's my crazy Moonboy Zcash chart. We'll start here. Crazy Moonboy chart. Drop this Johnny into logarithmic scale. Boom. Get rid of this garbage. TA crap. Nobody even needs or uses. So this is my Moonboy Zcash chart, guys. And basically what I'm looking at here is trying to get an average entry of like 500 to 400, somewhere between 400 to 500 if possible, or even lower would be epic. And I'm looking for a 2,000% move over the course of about a year. Stretch it out a bit longer. About a year and a half. We're looking for I mean, this might be a little bit aggressive. Maybe we can just go like to here. 7,500. This is what we're looking for here. We're looking for entries here. We're looking for a crypto bull. And we're looking for something that looks like this. You know? So this is the Moonboy math today. Rob, please give me a chance. Go XRP, Catman Jovi. Oh, that all checks out. The hatred and then the XRP show. Nothing's new there. Yeah, so, I mean, look, we're looking at the precipice of the next bull. We're looking at things to buy. And this is the moon math for Zek. This is it. We're looking for a 1,700% move over about a year and a half. Structuring from about 500-ish, let's call it 400 to 500. I think this averages around 425. So if you just pull it up to where we're at right now, 510, looking at about a 1,400% move over 535 days, getting us to, I mean, if we really want to stretch this out, we're looking probably more something like this. So about a year, almost a full 2 years, we're looking for about a 12x. Yeah, wow, new type says. So the question is, are you guys going to be able to hold this, ride this? I'm going home this weekend, and I told Rob this already in the team after talking to my quant. And I'm going to put a multiple six-figure position on Zcash, and I'm going to vault it. And I'm not going to touch it for 2 years. At least that's the plan. Make the plan, trade the plan. I tried other plans so far this year, and seemingly my fingers are the ones getting me in trouble in the markets. So I'm going to cut my fingers off, figuratively here. And I'm going to size up, and I'm going to vault it, and I'm going to come back and see what happens in about 19 months. What do you think, Rob?
I find this analysis so uninteresting. I mean, why only 1,700x or 1,700%? Why not 15,000%? There's zero logic. There's no argument.
It's private Bitcoin. Did you see?
I mean, that's in 2 words. You actually said more in 2 words than you said during that whole rant.
Dude, we are like right here on Zcash right now. We're like somewhere here.
Edward said buy everything in October, especially if government shuts down.
Yeah. I mean, that's the play, man.
According to Google, government shutdowns are typically not bullish. They're bearish going in and they're bullish coming out. Once the government cracks a deal, typically it goes along with like a funding package for the government, and they are, back to work. That funding package, as well as the government going back to work, is typically bullish markets. So everything sort of is lining up for like maybe not. I mean, if it's expected to close September 30th, right? It would be closed for, some significant amount of October. So yeah, everything is sort of gearing up for like a mid-October sort of. And I could see like people say October, and then I think they're going to start to get front run.
Yeah.
But now might be too early. Not to say that, we're going to get another leg down, but we're in apathy. And, there's a lot of calls as to how long, when we're going down, people like to call like, oh, we're going to get down this far. Right. And they like to try to predict bottoms in terms of like capitulation. But it's, similar when on a time dimension, if we're trying to predict when apathy is going to end. So it just feels like now I think we're firmly in this apathetic market condition. We know bear markets die in apathy.
Yep.
The only question is, it's not if, it's when. It's just when. I don't think we're going that much lower. I think that is now consensus. Maybe there's one leg lower, but it feels like we're sort of just going to range. Like, what is that? That's Bitcoin there, right?
Yeah.
What is the bottom? Like the Pico bottom of this?
57.5.
57.5. Maybe we touch 55, but there's like pretty significant, like just, interest at these levels.
I'm just drawing lines.
Just painting. I don't think we're going to go that much lower. I think this is just a matter of how long this gets drawn out. October would be a year from the top. October 10th would be exactly a year. I mean, it would just be absolutely serendipitous, just magical.
Yeah, this is
if October 10th was
this
like,
line was literally
to the day
drawn randomly at the bottom at October 10th. I'm just gonna leave this squiggle on there, guys. I'm just gonna leave that squiggle there. It could be completely wrong, but that would just be incredible if we did bottom on October 10th. Wouldn't even make any sense. Anyway, let's look around here at some other things. Pump.
I mean, we're in apathy.
Looks great.
But it also seems like, previous markets, it was like, all right, if Bitcoin just stopped going down and chilled out and got a little bit apathetic, alts would actually do well. But that's not the case anymore.
Yeah.
Right? It's almost like we need Bitcoin to like lead this rally. Bitcoin even did bounce a little bit. Alts didn't do so great. So it feels like we need Bitcoin to lead. It feels like we're like really getting, into the apathetic part of the bear, which is the end of the bear, transitioning into a bull.
This would be pretty nasty. A little wick below 50.
I mean, how low do you have that going?
49, 50.
Maybe.
That would be gnarly. That would be a nice shakeup for sure. That'd put me back on the streets. Ben Cohen approves this dubious TBA. You need some indicators on there. Yep, I feel you. So I don't know, guys. I mean, this is the crazy thing of the market right now is this oil stuff. What is it, like CL? Like just straight ripping. I mean, this thing just had a bounce of all bounces.
Yeah. We had, I think Fajao said that
39%.
This uptrend, I messed with my mic a little bit, so I hope you guys can still hear me.
Yep.
This uptrend was a little bit more treacherous in the oil market because the stockpiles are running out. And so it's almost gnarly. A little bit curious, like why Trump is letting this run. Why we're not bending the knee a little bit, why we're not, publicizing some great deal with Iran. Because right now, oil at 100 is usually around the time when things start looking like a deal is going to be made.
Yeah, I mean, this is crazy. That's a hell of a move.
So,
he
might be looking into the weekend is typically when things...
Yeah. The other issue is this. The capital flows guy has been saying that there's a change of structure, and people are expecting this little stock pullback to like these levels here.
Okay, I can see it.
We were looking yesterday at like this, the yesterday's candle looked pretty strong, and then this performance today from the Nasdaq really kind of looks pretty bad.
Yeah,
S&P
but remember,
not as
Bitcoin
bad.
was doing well. It started to
still
dive.
is, yeah.
It started to negatively correlate with Nasdaq.
Just briefly,
and I think that's actually, I think there's something, you can point to TA, but I think there's something fundamentally to discuss here where, the rest of the altcoin complex is trading more like risk on tech stocks, and they are risk on tech stocks, and Bitcoin is not. Sometimes Bitcoin gets treated as a risk on tech stock, but it's starting to trade more like inflation hedge. And this is like a really, really fundamental, because Bitcoin oscillates. It trades, sometimes it trades like a risk on tech stock. Sometimes it trades like a, alternative asset class inflation hedge. The fact that it's getting treated more like an alternative asset inflation hedge means I think it will start to diverge not only from altcoins, but also from the NASDAQ and the rest of the tech industry. So I could see a scenario here where stocks correct, tech gets hurt, altcoins get hit.
Yep.
Bitcoin doesn't. It holds like that 62, 64 level.
Yep.
Right? It holds strong and bounces pretty hard, in a negative correlation with the rest of the NASDAQ. And I could see how NASDAQ and altcoins trade in unison.
Yeah, I mean, that would be the bottom. One more big move down, maybe new lows, maybe not. Stocks pull back, and then that's it. That's the bottom. That's the end of it.
I think so. And I think going into a paradigm, and I think, look, I mean, the mention about attention and, how that directs flows and everything was a tweet before this. Like, there is a real element to that where all of the politicians in the world, both the Democrats and the Republicans, are both complaining about the spending of money.
Yeah.
They happen to be, pointing at each other, blaming each other for why that's getting spent. But the reality is that the money's getting spent. That's what all the attention is getting focused on. When the government gets shut down, all the attention is going to be focused on the amount of debt, the amount of the budget, how we're going to have to approve this new budget for the US government, how that's going to cost so much money. And it's all inflation, inflation, inflation. Bitcoin as an inflation hedge, right, is going to correct that and become like the exit, the escape hatch for that narrative. So I could see a scenario where Bitcoin just holds the line. You're going to get like headwinds if the equity market does correct. And I think that could take alts lower. But I don't think it would affect Bitcoin nearly as much as it would affect alts nor equities.
Yep.
Bitcoin holds up. Going into this attention on, the printing of money in the national debt.
Yep.
Bitcoin does, even if it just meets the headwinds and it just holds steady. I think I could see those two narratives just offsetting one another, holding this range. And once we get through like this government shutdown, we approach more of the midterm rhetoric, and we get through some sort of equities correction. That's when I think Bitcoin leads out of that and alts follow.
Drill, baby, drill. Drill that oil. The hacker of Vlad Tenev made $974,000 on a token that posted on his X account. It was only a 3 mil topper. Yikes. Insane.
I don't have much else. I feel like I've cemented the thesis in my own mind. Equities correct. National debt rhetoric. Alts trade like equities. Both correct. Bitcoin holds steady and leads us out of this bear. Maybe a couple weeks or a month before alts follow suit.
All right, guys, let's get into the Daily Equity Show, powered by our friends at Denari. As we kind of come to a close here, today's Daily Equity is about bonds. So, Rob, I think you can just kind of follow up on what you're saying there. Let's get into it. Imploding across the globe. Bonds are imploding. Equities are next. Great Martis says, if you look at this, the 10-year is rising. Equities may be the next market to price if higher yields keep tightening financial conditions. Obviously, the oil as well. Look at these bonds across the world. I mean, the yields are just pumping. The 10-year, the 2-year across Australia, across Germany at 3.2%, Australia 10 years at 5%, the US 30 years at 5.15%. I mean, it's happening. I mean, rising sovereign yields are direct threat to equity multiples. If bond markets keep selling off, stocks may face pressure, tighter liquidity, higher discount rates, and weaker growth expectations. This kind of aligns with the thesis of a bit of a slower September for stocks in general, as we've just said. And so, Rob, I mean, just kind of building off what you were just saying, what's your read on this?
Well, I think this is going to tighten financial conditions. And so we have to, I mean, I think this is aligning with what we were saying previously.
Yep.
So let's see, I'm getting some intelligence.
All right.
And so 2-year and 10-year are going higher. This is consistent with the bond market all across the globe.
Yep.
You know, we already see kind of the magic 8-ball in the chart. TA is saying that, you know, equities look like they're kind of due for a correction.
Yep.
The government shutdown is sort of a different thing, but, you know, there is potential confluence between what we could see from a narrative point of view. If we're just looking structurally, what's happening in the bond market is going to lead investors to sell the treasuries, because when yields go higher, bonds go lower. And so the bonds are effectively crashing in price.
Yeah.
People, you know, even if they think they're going to get, you know, this percent over, you know, so many years, it's not worthwhile to hold on to these bonds right now. And so they're going to get sold off, which is going to, you know, bring the prices of these bonds lower and push the yields higher, because in order for you to hold on to a bond that's lower, you're going to want a higher yield to hold it. And so that's kind of what's happening right now. What does that mean for equities prices? It means tighter financial conditions.
Yeah.
These guys are just not going to be able to get cheap capital. They're going to have to pay a lot in interest in order to get capital.
Yep.
Investors demand more compensation because inflation could erode returns. So inflation expectations rise. That's typically what we see on the long-term time horizon. 10-year, you know, going past upwards of 5% is not great. Does not bode well. It's you know, signaling higher inflation over the long haul. So instead of lending the government money at 4%, investors now demand 4.6%, maybe 5% if we get to that level. And so the investors in these bonds are saying, hey, government, if you want money, and we know you want money because your government's about to shut down because it doesn't have enough money, well, we're going to want a higher yield.
Yeah.
And that's going to mean you pay us more interest.
Yep.
Now, that's what's happening. And, you know, how do the equity markets and how do the crypto markets react to this? I think it's short-term bearish, long-term bullish. I think Bitcoin transforming into this inflation hedge is exactly the anecdote of this market.
Of this market. I agree with that.
But again, we're sort of like, you know, the pendulum swings. And so, you know, before we get to 100% inflation hedge in the way that people perceive, you know, this asset, you know, before we get to 100% inflation hedge and 0% risk on, you know, tech asset, maybe it's 90-10, right? And we need to get all the way to 100-0. And so, again, short-term bearish, long-term bullish. I think equities might correct. Bitcoin just kind of holds steady as more people start to realize that it is the inflation hedge that people are looking for in this market. And it is the quickest to react. And, you know, once it does, then it's going to signal to the rest of the market. Crypto is, you know, when I say crypto, I mean the altcoin complex is the next to react.
Yep.
And then I think equities react as well, but we don't know how deep that, you know, correction goes. But I think typically it will correct, and it will be the slowest to correct out of all.
Yep. I agree with that. And Bitcoin's also kind of like leads it usually. So
yeah.
That's our daily equity today, guys, powered by our friends at Denari. Visit denari.com for tokenized US equities and public markets on chain. They have their SpaceXD live spot trade on Hyperliquid and more coming. This sector's blowing up. Check out Denari at denari.com. And that pulls us to what I think is close to the end of the show here. Soundboard guy, I need you to find the soundbite from SpongeBob where a citizen says, "Oh man, this guy stinks." New type, man. You are something else, man. Oh God, Charles Hosky is now comparing Cardano to the rise of Anthropic. Interesting.
Oh boy.
Cardano.
All right, Andy. We've got one more show before you go to Argentina. What do you want to close this
Dude, let me
week out
just
with?
show you what's happening right now in Argentina. Oh my gosh. You're going to be shocked. In Chile. Check this out. Check this out, guys. This is insane. I've never been prepping for a ski trip, and there's about to be more snow and powder than I even know, like, what is even possible to do with it. Like, I'm scared. I'm legit scared. I don't know what to do. I mean, there is just an incredible amount of snow. Like, wow. Look at this. And pull it up, show you guys real quick as we sign off.
"12 feet of snow." How close is this to where you're staying?
This is like a couple hours north. So higher elevations.
I lost you in the meat.
What? Couple hours north of where I'm at, of where I'm going. Higher elevation, so a bit better snow. But I mean, it's nuts. Like, I mean, it's insane. I mean, check this out. You see this?
He's just in there.
So these resorts are fully just like basically, you know, you can't even get out of your resort. It's so freaking. Look at this one. Look at this transformation. Have you ever seen something go from looking like a desert 6 days ago to this? It's the same area.
That's got to be good timing to go ski down there. It's fresh powder.
Dude, couldn't even be better. The question is do we change the itinerary and head a bit more north into Chile to get more of this? Let me look at this. Look at his beard. Nah, it's all good.
Probably a good move.
Super El Nino. Yeah, NOSC, I agree.
Yeah, baby!
Like, are you kidding me? Are you flying to Argentina? No, I'm gonna walk down there. New type. What do you mean, buddy? Are you guys posting the Vlad interview this week? Soon.
It's a good one.
Jeepers, Batman, Super El Nino, W's show. Yeah, so that's what I got on my plans here, guys. Rob's gonna run the show next week. And yeah, it should be awesome. So we got one more show tomorrow. We got a bunch of good guests. Finish out strong. Finish out this week in the market strong, although things do look a little bit worrying across the board. Finish strong on the markets, finish strong on the week, finish strong on the charts, finish strong this month, finish this bear market strong, guys. We're not going anywhere. We're right here with you guys. W's in the chat. Good show today. Rugrat, I know if he was watching today, I didn't see him in the chat, but he'd be ecstatic about the price of Bitcoin and what's happening there and the price of Zama. Really, the price of Zama.
Rugrat's on his boat.
Yeah, he's on his boat right now.
But he's in his helicopter going private jet shopping.
Euro summering. So, guys, W's in the chat. Thank you for being a part of the show today. As always, it's a pleasure. We are live here from the financial capital of the world. If you're watching on YouTube, throw us a like, throw us a subscribe. We really appreciate it. It goes a long way for us. See you guys tomorrow from the financial capital of the world. You're watching The Roll Up.